Welcome, everyone. My name is Chris Salerno, founder and CEO of QC Capital Group. Excited to have everyone here today on this Thursday. Myself and Ryan Markey here are very excited to dive through a presentation of our QC Car Wash Fund 3, which I'm sure some of you have already seen with our wonderful relationship that we have with CRE Daily. They're always giving great information. I've been a very valuable and long subscriber since basically inception of CRE Daily. So appreciate their partnership. Before we get things started with our presentation, we do have a Q&A box. It will more than likely show up at the bottom of your screen. If you have any questions, please go ahead and click on that Q&A box. Type your question in. Ryan and I will do our best to get to those questions at the very end of our presentation. We want to make sure we go through in fine detail with the presentation because most of the stuff will be answered through that presentation. And then towards the very end, we will go ahead and open it up for those questions and we'll answer those here live. To get started, though, I would love for you guys to get to know Ryan Markey, our managing director over capital formation here at QC Capital Group. He's going to give a little background about himself, his history, and what he does at QC. I will then go ahead and give a background about myself, and then we'll dive into our presentation. Ryan, you want to take it away?
Thanks, Chris, and thank you all for joining us today. We're really excited to bring you guys this offering. It's something that we've worked very hard to put together. We've got to see it's very strong track record on the previous two funds, and we're just delighted to be able to have the opportunity to present this in front of the CRE Daily Network. My name is Ryan Markey. I'm managing director here at QC Capital. My background is in asset management from about the most traditional to some of the most non-traditional assets. And I will tell you this is that out of all the assets that I've overseen over the last, call it 20 plus years, that the car wash industry, asset class, whatever you want to call it, is by far the most exciting, especially given this time period right now. We've got such a significant runway in front of us. We've got this trifecta of benefits that have all come together, and we are on the forefront from an opportunistic standpoint to take advantage of that. Not to mention, as we roll into the 2026 tax planning season, we want to share with you one of the most powerful tax planning tools available, and it's this right here, Car Wash Fund 3. So we're excited to get into it. Chris, I appreciate that.
Most definitely, and excited once we dive into our presentation, Ryan, for you to chime on some of the major things that you are hearing directly from our investors on why they're loving this fund, and also I'll chime in as well. But again, I want to thank everyone for joining us on this Thursday. My name is Chris Salerno, founder and CEO of QC Capital Group. I started out in the real estate industry over 12 years ago, first in the single family space, where I then built out a rental portfolio, exiting all of that. Then I got into a couple businesses, one being a very large broker. We were number fourth in the world, over 147 million in annual sales. Just in about 2.5 years, I was able to build that from 92 million in annual sales. I had a wonderful exit selling that business and a business prior to that. But I was probably in a position of where most of you are on this call, where you are making a significant amount of income, and Uncle Sam, the IRS, wants you to pay taxes on it. And I then learned through our beautiful cost segregation and bonus depreciation that we have with the IRS, the ability of large commercial real estate. That is when I created QC Capital Group towards the end of 2018 and the beginning of 2019. From there, we had a wonderful run on the institutional side of multifamily, scaling upwards of close to 500 million at our peak, selling off a majority, about 75% of our portfolio right before the interest rate hike. And our investors kept coming back. They kept saying, hey, we want cash flow, we want tax benefits. And that's when I brought the team to a round table and I said, what is out there? What type of asset class is out there that is very strong? It's investing in the infrastructure of daily life. And that's what we invest in at QC Capital Group. We invest in the infrastructure of daily life. What AI can help make efficient but not replace. what we still need as a necessity to operate our daily lives. And that is when, in the beginning stages of 2023, we got into the car wash sector. Now, I'm happy to say with this fund, we are in the car wash sector and the express oil sector, which we already have two express oils operating close to 83% profit margins, very healthy profit margins in the express oil industry. And there it couples perfectly with the strategy and with our thesis of express car washes throughout the Southeast. And we've been doing it since 2023 early. We have a very well experienced team, which we'll touch on here. And I'll go ahead and open our presentation. Again, if anyone has any questions, please go ahead and put those in the Q&A box. We'll be able to answer those directly towards the very end. Ryan, I'm going to share my screen. Let me know once you see it.
Good to go, Chris.
Perfect. I appreciate that. All right. So this is actually one of our sites. It does have an oil change on this particular site. This is in Melbourne, Florida. Our geographical footprint is throughout the Southeast. So we're located in headquarters in Charlotte, North Carolina. We have a regional manager that oversees our Georgia and South Carolina portfolio. And then we have our regional manager that oversees our Florida portfolio. They then all report to Chris Stevens, which is our VP of Ops. You'll see that on the back of our presentation here shortly. Why invest into Car Wash Fund 3? We get this question a lot, and we're going to start off with some major key points. The boxes to your right are maybe some statistics, if you're not familiar with the express car wash industry, that may shock you a little bit. And sometimes throughout the states, when it's very hot during the summertime, cities actually tell residents, they encourage you, if you're going to wash your car, go to your local car wash and wash your car. I think you may be very surprised with some of the statistics on the car washing sector. So those are what's in the blue box. But the main reasons why people are investing and have invested in our Fund 1, Fund 2, and now Fund 3 is our track record. Chris Stevens has over 20 years of car wash experience alone. Chris Melly, who's our head of maintenance, has over 25 years of car wash experience. And our chief development officer, Heather Fry, has over 16 years of construction experience. We have a well-oiled team here with a tremendous amount of experience in the car washing sector. Why is that important? Is because car washes, from the picture you see below, is our Melbourne site, is highly operational. You see, we're running 3 cars there within the matter of 7 minutes. And so you have to make sure you have a well-oiled machine when it comes to the operation and the leadership side, systems and processes in place as well, which thankfully we have that. And that is why investors love investing, is because of the track record, what we've built here at Aquashine Express and Cruise Express Oil. We have 10 operating express locations. We have 2 operating express oil change sites, 4 additional sites under current development. That is not including what we currently have under contract as well. We are projected over 100 sites within 6 years. And we have implemented the systems and processes that the institutional grades like Leonard Green, KKR, Warburg Pincus, your very large PE firms that are in the car wash sector that you may not even know that they were in the car wash sector, but they're in the car wash sector. We've implemented these on the ground level to make sure each of our sites are operating to the most efficient as possible. And again, we love to adopt AI in our systems and our processes. We don't want AI to replace it when we make investments. That is something that we really strive for. People have to get their oil changed, and people take care of their vehicles. The reason why we're seeing an uptick in 2026 with our year-over-year sales is that vehicle prices vehicle prices are higher. The average monthly payment for your vehicle is now over $770 per month, and I believe the statistic is 52% is over 1,000 per month for your vehicle. People are holding on to their vehicles longer, and they're taking care of their vehicles. So they see as getting their vehicle cleaned and an oil change is a necessity on taking care of their vehicles. And we love to help them do that here at QC Capital and Aquashine Express. I'm going to pass it over to Ryan. Ryan speaks to investors. I mean, his schedule is always packed out on a daily basis. Ryan, what are you hearing directly from our investors that have already invested in fund number three? Why they're loving this fund.
Well, I'll tell you that the same reason why our investors from funds one and two are keep coming back, and that's because we've provided an offering here, an opportunity that regardless of where you live in the entire country, you're able to take advantage of one of actually the most lucrative pocket to own and operate these column subscription-based at tunnel express car washes. You couple that with the cash flow that comes component that comes along with it. We're monthly tax-free cash flow. We're paying distributions every single month, 100% track record, paid at every distribution on time, every single time. We've never missed a distribution, and we certainly have never had a capital call. And I hate to even use that word. Fortunately for this industry, it's about as simple and straightforward of an industry and asset class as it can get. And we've done everything we can to simplify that and to structure out this fund to be about as tax efficient as humanly possible for all of our investors. And I'll get into that here shortly. But when you couple those monthly tax-free distributions with the back-end profit share, with those significant equity kickers, I really don't think that there's another offering out there in the market right now that comes close. I talk to people every day that are much more intelligent, much more sophisticated investors than I am, and I'm waiting for something else out there that is better than what we brought to the table. And it's just I'm not seeing it. And then you couple that with the tax benefit piece, up to 100% depreciation in the very first year. The runway here, the amount of capital and demand that's coming into this space, and we just started on this is just incredible. And I'm just real couldn't be more excited to be part of it, Chris. And I know that speaking from investors as well, it's extremely popular and lucrative, and they're loving what we're putting out there for them.
Very much so. And a couple key points too before we move on to the next slide is one thing that's very unique about our group is that we own the underlying real estate of all of our assets. So we are real estate guys at heart. I built the company off owning traditional real estate. We prefer and we do own the underlying real estate of all of these assets. A lot of companies out there, and Leonard Green, who just took Mr. Private at close to an 8x multiple for just the business, we have seen a lot of these groups will buy car washes, triple net lease the real estate, pay a lease payment, recoup capital, and use it for expansion. So I totally get that. However, our philosophy is we like to own the underlying real estate because when we go and have that exit, we have a higher multiple because it gives an option to a larger PE firm if they want to go and triple net lease that real estate out. But we see higher multiples when you own the underlying real estate. So for us, we prefer to own the underlying real estate. We've been offered plenty of car washes without the underlying real estate, and we've turned them down. We like to own that physical real estate component with all of our sites. That is something that is very important to us. On top of that, we'll get to the tax benefits because we have a full slide on that, and I think you guys will enjoy how lucrative the tax benefits are for these. For those that may not know about car washes and their unique tax code that they have with the IRS, and how it can really maximize and limit your tax liability that you may have as well. All right, our next slide here. I had this thrown in last minute with this next slide. One thing great about our fund number three, and I know Ryan has talked to a tremendous amount of investors on it, is that all of our funds at QC Capital Group from January 1st, 2026 and now beyond are all third-party audited by Elliott Davis, and they are approved on the Charles Schwab alternative platform. That is something very unique. That is something that takes an extensive amount of due diligence, research, and also very thorough background checks of the fund, of the accounts, of our organization. And so we're very proud and pleased to always say that we are listed on the Charles Schwab's alternative platform. So if you have a investment advisor, if you have maybe just a single independent Charles Schwab custodian account where you do your trades, you will actually be able to see us using this code right here. This is our basically social security number for Charles Schwab, using the SSID number to find our fund on Charles Schwab. This is a huge layer to our fund, and why investors love it, because our funds are third party audited. All of our financials, which we provide on a quarterly basis, are GAAP audited through the third party. So you are able to see the raw financial information on how the fund is performing and how the sites are performing. And we also have to provide that to Charles Schwab to make sure we're compliant with Charles Schwab. So whether you come through your investment advisor, your own custodian account through Charles Schwab, or come to us directly, you're able to have that thought process and know that we are on Charles Schwab's. We go through these steps to make sure that we are approved on there. Ryan, you want to
Chris,
talk?
let me add one thing to that too,
Yeah.
just to keep it clear. So, going through Schwab is fantastic. We absolutely encourage it. The minimum investment value through Schwab, however, is at $2 million. So, for majority of you, you guys are retail investors like Chris and I. As a retail investor, you've got the ability to come straight to the source. Come right to us, and then we will go over our classes, our different classes of investments levels here shortly. But I just wanted to put that out there. One of the best things, and obviously it's exciting for us because we were approved by Schwab, and it was about a 3.5 to 4.5 month underwriting process, like Chris said, of not just the fund, but also of our operations and the leadership. And essentially what we've done here, as exciting as it is for QC Capital, it's also very exciting for every single participant in fund number three. Because of having that additional significant pipeline of capital coming in from the Schwab side, obviously the way that we've got our return analytics and the way that we've got the fund structured from a return perspective, having that additional significant pipeline of capital allows us to bring more capital in quicker and then deploy that capital into good deals. And on the back end, obviously, the quicker we can bring that capital in and deploy it into good deals, everybody wins. It's the rising tide raises all ships mindset. So it's not just a win for QC Capital being on Schwab. It's an absolute win for every single investor that participates in this fund number three.
Well said, Ryan. All right, our Aquashine footprint, you can see right here. This is where our current sites are and also our development sites that we have. You can see and we'll be able to send this out too. This page of each individual city of where they are at and what fund they are at. As you can see, with our headquarters being right here in the middle of the Carolinas, we have the Greenville and Atlanta market. We also have the West, East Coast, and Central Florida, which is all have been built out. And our main primary focus, especially with fund number three, is building out a dense portfolio around our already operating sites. This helps us really grab market share. It helps our customers go from site to site, and they're able to use it. We have some customers that live in Atlanta, and during the winter time, they come down to Melbourne, Florida, or Sarasota, Florida, and they use their membership. And they're able to use their membership at every single site, no matter where they live, as long as they are a member of our site. I do see a quick question. I am going to jump to it real quick. One of the questions is the car washes as a ground lease to keep the real estate? No, we own and operate the car wash. So we built an operating team, which you'll see towards the very end of our presentation here, but we own the underlying real estate and the operating businesses. The reason why we do this is so that, one, we're able to pay higher margins, higher distributions to our investors, which you can see as Class C, and I'm about to go through, is that we own the underlying real estate and the operating business. If we were to own the underlying real estate and not the operating business, the distributions and preferred returns would not be as high because it is your traditional real estate where you'll have a triple net lease, rent increases every so often or every single year, depending on how the leases is structured. So we like to own the operating business and the underlying real estate as well. And one of our exciting slides, which is our preferred return slide, all of our investors love to understand the distributions and how they're structured. We have three different type of classes. We have a class a class B, and a class C. Keep in mind, all of our distributions are paid the last week of each month. So they're monthly distributions with quarterly audited financials that we have third party. And so you're able to view those. We also update our investors once a month, which is the last Wednesday of each month. Being in the fund, you'll be able to get an overall fund update and then a site by site update on how each site is performing when it comes to traffic count, when it comes to cars washed that month. You will be able to see a full in depth on that. With all of our development sites that we have, those development sites, we actually provide live camera views to all of our investors. So all of our investors have the ability to have a live camera view that they can just log into, and they're able to see the progress of our developments and how the developments are going when we are developing a site. So each of our classes here are listed. Our class A is a 10% annual return with monthly distributions. It's 60% on the back end to the investor, 40% to the GP team. Our class B is our 12% annual return. So that's 1 point per month. That's 70% on the back end, 30% to the GP team. Our class C, which has been a very popular class, I will say, we've also allowed investors to pool partnerships together to hit the minimum of the class C. That class C is a 14% annual return with monthly distributions and an 80% on the back end, 20% to the GP team. You can see on the right-hand side under our Melbourne site there, our minimums for each of the class. Our class A is a minimum 100,000, class B is 250, and then our class C is a minimum of 2 million. Anything to touch on this slide, Ryan, before I head to just the breakdown of all the whole overview of what they can expect?
No.
Perfect. All right. Oh, a big thing about the returns and the preferred returns, they are categorized as a return of capital, not on capital. So you're not paying taxes on those distributions because they're return of capital. How we formatted our Reg D 506C, which we are only open to accredited investors, and I like to make sure everyone keeps that in mind, is that we do a third-party verification. So this is only open to accredited investors. Is that on the back end, you'll have that long-term capital gain tax when we have that liquidity event, if we are selling. With a refinance, I'll show you the tax savings on that portion. On this particular side right here, these are projected returns. As you can see, our top box is our class A for our minimum of $100,000 investment. We're going to go all the way. You'll see the 10% annual return based off of that minimum investment. The bottom right hand of the 177,953, that is your total overall estimated return, including your distributions and the back end potential profits on from a sale or refinance. Our class B is our minimum of 250. As you can see, that is the 12% annual return. So you're going to get that 0.1 per month. If you look at the very bottom right hand of that box, the 481,530, that is your total estimated return, including those distributions and that back end potential profit split. Our class C, which is the minimum of 2 million, you can see that that's at the 14% annual return. So if you go all the way down to that bottom right hand column there, that's $4,145,418 for our estimated total overall return. Keep in mind what Ryan and I have seen, and this is definitely okay, is that a couple investors will pool their capital together. For example, 4 investors pooling 500,000 together to hit that minimum 2 million, then they can come in at that 14% mark. We've seen it happen, and we're okay with that. Ryan, anything to touch on here?
No, I think you covered all of it.
Perfect. All right, accelerated depreciation. So when it comes to the depreciation, everyone files their taxes differently. And so we always just like to say it definitely comes down to how your CPA files your taxes and how your taxes are structured. So we are not giving tax advice or CPA advice for you in your specific situation. I can speak a little bit about myself personally. However, we wanted to do this slide because it's a comparison from what we've seen from other opportunities that you guys may see out there. That's from oil and gas. A lot of multifamily, are providing 7% prefs, but it only cash flows truly 3%. So technically, you're only getting 3%, which is right there a little lower than the money markets account. Same with self-storage or any other type of car wash opportunities that everyone may be exposed to out there. We've seen. And so I had the team provide a side-by-side comparison just based off of our Class A and our Class B type of investments. And you can see, and I won't go through line by line, but at the very bottom is the total return difference. And this goes back to the investor. And you can see the big variation here on the differences amongst our opportunity and in the opportunity of others that are out there. And the key differences here is we're providing a higher pref. So for this example, we have the 10 and 12%. That's our Class A and our Class B pref. So we're providing higher cash flow. And like Ryan said at the very beginning with our introductions, is for fund number one, fund number two, we have paid those distributions out, have not missed a distribution of the 10, 12%. Now that this fund has that 14% because we saw so much traction in our fund one and fund two, we decided to make the pot a little sweeter and increase that pref amount for our investors. So you're getting a higher pref return. Our estimated, because we have the business and the real estate, these type of opportunities trade off of an EBITDA multiple, not necessarily just a cap rate for those real estate guys out there that are just traditional real estate. And so based off of the market and that we own the real estate and the business with that full operation, we see a little higher EBITDA multiple exit, which is around 12 to 15 multiples from what we're seeing. We like to acquire between 6 and 7.5 multiples. We're very, very discipline when it comes to our underwriting and our acquisitions. One, because we bring investors' capital into these deals. Two, I invest my own personal funds alongside of all of our investors. And I'm also signing personally liable for every single car wash and oil change that we have. So there's a very large interest of alignment with the GP team and all of our LP investors is that we are placing our own capital into these deals, and I am personally liable for all of these opportunities that we place into the fund and previous funds. All of these sites that we have in our portfolio, I sign personally liable for. One of the big things you're going to see here is the depreciation recapture zero. You may say, well, Chris, how can you do a depreciation recapture at zero? From what we've had discussions with our CPA is that when we do a refinance at a refinance event, investors are essentially paid out their share of ownership and they participate in the cash out refinance. And at that moment, they are relinquishing their ownership, so they get that cash out refinance, which they'll pay long-term capital gain tax on, but they don't have to worry about the depreciation recapture because it's essentially falling back onto the company. And so that is why we have it there. I always say each CPA is different. It's in each individual on how they file their taxes can be different as well. So it depends on a case-by-case basis individually. And that is how we get the higher number. That is how our fund is separated from all other opportunities that you see out there. Now, one thing that Ryan touched on, which investors love, is the up to 100% depreciation in year one. Well, yes, everyone on this call knows that the depreciation is 100% for bonus depreciation this year. The reason why we can have and we've seen such high depreciation in the express car wash industry and now the express oil industry, because we have two of them, is that the unique tax code that the IRS has with these type of assets. The tax code under 179 gives us the ability to depreciate this asset at a 15-year depreciation schedule. All other commercial real estate's 27 and a half. You just go regular traditional. We know that's even higher. Well, with our type of asset classes, we're able to depreciate at a 15-year depreciation schedule, which means we have higher depreciation. we can also take the bonus depreciation in year one of all of the equipment. So that means our LP investors that are investing, they get to benefit on that depreciation, that high depreciation because of all of that equipment and in the building as well. They're able to utilize that because of the such unique tax code that express car washes have. So, and we pass that down directly to our investors. And so that's how we're able to obtain a higher depreciation. Ryan, you want to touch on anything here before we head to the next?
I do, guys, and just to reemphasize that this fund, as well as our other fund, is 1031 exchangeable in and 1031 exchangeable out. So, like I mentioned before, we have done everything we can to make our funds about as tax efficient and beneficial as humanly possible for our investors. We've got a couple of other exciting updates that I'm going to wait till the end of the call to share.
Yeah, perfect. All right, here's a dedicated team. I know there's one great question too I want to touch on is about development. So this is a mixture. We're seeing a lot more acquisitions right now than development greenfields, which is great for our investors because that means immediate cash flow and also immediate depreciation. So we're seeing a more healthier mix on the acquisitions versus developments. For our developments, when we analyze a site, and this goes for existing sites as well, we really like to see a very strong dense in population. The main road frontage has to have over 25,000 annual, or excuse me, daily traffic pass visitors of the sites that we are looking at. And the main key thing here is that dense in population and then the median household income. We want to make sure it's a healthy median household income when we are looking at a site. From that, all of that may check the boxes. However, we still may pass on a site. And as an investor, you may say, well, why would you pass on a site if those criteria check your box? And it could be because of the layout. If it's an existing site, it could be because of the layout, how the layout and the ingress and egress of someone coming off of that road, how fast is the speed of these cars traveling. You don't want it 70 to 80 miles an hour because they're going to have to brake 50 yards ahead, which could, really damper the amount of traffic that's actually going into your site. So we look at all of that. We analyze cell phone data to see where people are migrating to in and around our sites to other businesses. We do a very thorough analysis on a development and an acquisition site. The lovely part about our fund too that no one is doing is with our developments that we have is that we are able to build on smaller parcels of land. And because we've been able to build smaller footprints, our number one site right now in our portfolio is a 75-foot tunnel in Greenville, South Carolina, producing phenomenal cars. And the ability to have AI technology process those cars in a shorter tunnel is just a huge benefit to our investors because our cost to develop is substantially less. Our competitors are building for around 10 to 12 million, in some cases upwards to 14 million for one car wash. We're able to get it done for anywhere from 5.5 to 6 million, depending on land costs, all in on a 75-foot express car wash tunnel. And we're able to do that because we're going on smaller parcels of land, so we can actually get real granular around our sites that we currently already own. And we're then able to also have that cost a lot less because the land cost is less, the building cost is a lot less. And on top of all of that, we're able to go ahead and develop at a faster rate. For all of those that are on this call too, I encourage you, and we'll send out an email to come visit us August 14th in Winter Haven, Florida. We have a grand opening that we're doing. We encourage all investors, if you're local or even willing to fly in, visit us on our grand opening, see one of our sites, feel it, touch it, see the operation, meet the operating team as well. And I'll make sure I put a note for the team to send that date out with that link. So if you are in and around the area, you're more than welcome to come to one of our grand openings, meet me in person, see the site, and really get a good feel for it. But that is something that really separates us, especially on the development side, compared to all of the competitors out there, is that they're building larger tunnels, more expensive, where for their price of one tunnel, we can build two, which helps us diversify risk, but also builds the density in these markets as well. Ryan, do you want to touch on anything before I dive into our team here?
No, go ahead with the team and I'll wrap it up at the end.
Perfect, perfect. This is our dedicated team. We do actually have some new faces that have came on recently too, because we are growing. It's very excited to see the team grow and everyone, all the new personalities come in. You see myself right there in the middle. You'll see Ryan on the left-hand side of me, Joe Hart, who's our head of capital markets on the right-hand side, Henry, who's our head of acquisitions, Amy Tuck, who's our VP of marketing. She also oversees our Aquashine and our car wash marketing. Same with Reagan, who oversees just our car wash and oil change. From the left-hand side, from Ryan, Chris Stevens, and Heather, those are dedicated individuals just for the car washes. So this whole team right here works solely on the car wash, making sure that they're operating, marketing, we're driving traffic to the site, we're seeing increases in memberships and lower operational efficiencies here. And the team will be growing because we have more sites coming. So I will probably have to get a couple more slides or reconfigure this, but you're going to see new faces because we are growing and we're excited to promote those people within our organization who understands our culture, who understands us being out in the communities and helping out the communities within our locations that we have. All right, and that's it for the presentation. I know we have a couple questions that we'll get to. Ryan, do you have any semi-closing remarks before we dive into those questions?
Yeah, absolutely. I just want to give some kudos to a couple of our team members. When it comes to these alternative investment funds, it really comes down. There's a lot of similar ones out there, and I know that you guys have a choice. The choices are abundant. Even in the car wash space, I see us as one of the top, if not the top operator in this space because of how we're structured. We're not just a private equity company. We're actually an owner and operator of our own car wash brand and operations, Aquashine Express. But what it really comes down to is that operations piece, that operator piece is the heart and soul of that investment. And fortunately for us, we have, I would say, arguably one of the top operators at the very least in the Southeast, sitting as our COO, Chris Stevens. So to have him and the team that we've surrounded him with of industry professionals with similar experience running the day to day goes doesn't just go far for Aquashine and QC Capital, but it also goes extremely far for every single one of our investors. And the track record shows it. These sites, every site, where I mean, we are performing, we are or outpacing every one of our pro formas. It's been a phenomenal scaling process for us over the last few years. And we're just really excited to bring this to you and for you guys to be part of it as we grow and continue to move forward. Enough on that one, on the car wash fund. I do want to make mention of just a couple other things real quick that we've got some opportunities that we're holding in the back pocket. We do have for as you guys go into your tax planning for 2026, I know that this is up to 100% depreciation for 2026 in regards to passive income. We do have an opportunity in one of our other funds that will allow you to offset active income, and that's something that you and I can talk about offline. I had Nina put my email address in the chat. Feel free to reach out to me. We can schedule a call for next week. And then we also have another fund that we recently launched that we're very excited about earlier this year called our Liquidity Fund. It's a simple, straightforward, short-term, 6-month, 1 year, and 2 year term, $50,000 minimum asset-backed fund that we've just seen that with the amount of volatility in the public markets, with the Iran deal, from a macroeconomic perspective, coupled with where we're going with the midterms coming up, we wanted to create more or less a parking spot for short-term parking spot for capital that offered consistent returns. Again, both of those funds also have 100% track records. And I didn't want to digress too much from this car wash fund because I know it's extremely special to Chris and I, but I also didn't, I wanted to make sure that I shared with each and every one of you the other two offerings that we've got. So happy to talk about those offline. Look forward to hearing from each one of you and moving forward. Thanks, Chris.
And I appreciate that, Ryan. I know we do have a couple questions, so we'll dive into those questions and then wrap things up. Again, I appreciate everyone's time this Thursday afternoon. Can you invest a 1030 or with a 1031 exchange? Yes, you can. Reach out to Ryan. We have multiple 1031 partners that have 1031s that place it into our sites. So happy to explain to you that process. We actually just closed a site in Alpharetta, Georgia Friday, and we had a 1031 on that site. So happy to explain that process so you can limit your tax liabilities on that. On existing investments down the road, at what percentage is bonus depreciation recapture? It definitely depends on your amount. It can be up to 25% of that essential depreciation that you've taken. So it depends on the time you go ahead and have that liquidity event, but it can come up to 25% of your initial depreciation. A lot of times groups won't discuss that. It's very important in my eyes, is that there are some bonus depreciation recapture, and especially we're seeing it right now tremendously in the market, given the market environment. That is a wake-up call to some investors that are not familiar with it, is that they may have a liquidity event or some sort of event with their investment, and then they get a letter saying that they have to pay back that depreciation or have depreciation recapture. So it's very important, but it definitely depends on timing and how long your capital's been in that investment, and then the amount you've taken in depreciation. Great question. Another great question. Why do you believe you can exit at a much larger multiple than your entry? That's a really good question. The market shows it. Right now, if you are purchasing a car wash, just the business without the real estate, we're seeing multiples of anywhere from 8.5 to 12 as a EBITDA multiple. We own the underlying real estate. All of the ones that we have seen on the market are anywhere from 12 to 17, depending on density, depending on location, membership count, revenue count of multiple. So our play here is that we are packaging these up in the select areas that you've already see from our map. And from there, we're building out that density, the memberships, the revenues are growing, and we're able, because we own that underlying real estate, we're able to get a higher multiple when we sell it off. We're seeing it in the industry. The reason why we're buying some of the sites at lower multiples is because of the relationships that we have with the owners directly. I even want to say too, we have a gentleman that has invested close to $2 million just in our fund number 3, who owns 2 car washes about 30 minutes from, I'm not going to say the exact location, but about 30 minutes from one of our sites, 2 of our sites in Florida. And he actually owns Express Car Wash Tunnels and is placed close to $2 million with us. We'll more than likely buy his 2 car washes because they are good looking car washes in great locations. But he's invested passively with us because of our areas, because of the business strategy. So that's why we believe and why we are seeing we can get higher multiples, because we own that underlying real estate. And that's why we will only own the underlying real estate if we have a car wash or an express oil. That is our philosophy, our thesis, and that's what we built the company off of. Great questions.
Chris, would you just touch on the self-directed IRA
Yeah.
ability?
Yeah, so depending on your custodian, on who you use with the self-directed IRA, you're more than welcome to get us in contact with that custodian, and we can go ahead and facilitate that. It is a little more time and paperwork, but we can facilitate that so you can use your IRA directly into our fund as well. Again, if you're on Charles Schwab too, if you use it as an individual custodian, we'll make sure this deck gets in your hands where you have that SSID number, and you can look us up on Charles Schwab, and you can directly through your custodian account invest through Charles Schwab as well. So that's also a huge benefit too. What is the benefit of a 75-foot tunnel versus other dimensions? Brian, really good question. So I see you're in SoCal, so I'm assuming you're in San Diego. Love San Diego, great weather year round. Let's talk about San Diego, for example, because that's your backyard. San Diego, I'm sure the price of real estate is astronomically high, and I'm sure finding good quality real estate is also can be very difficult. And so the benefit that we came up as a team and we sat down to really sketch, and we already have a proven model. I encourage everyone to come out to Greenville, but we also have August 14th, our grand opening for one of our 75-foot developments in Winter Haven, Florida. So I encourage everyone to come out and visit, meet me, visit the team, and see that in person. But what we realize is that when you go into markets like San Diego, when you go into markets like Miami, South Florida, Tampa, even certain markets in Charlotte and in Atlanta, it's very hard to find an acre and a quarter to 1.7 acres. And that is very difficult in a lot of these markets. not only difficult to find that, it's very difficult to make numbers make sense. I mean, let's talk about a 1.5 acres in San Diego. I'm sure that is extremely pricey. Now, let's compare that to a site that is zero point 0.6 of an acre. I'm sure the price per acre is substantially less. And so that's the benefit. We can go down as low as zero point 0.6 of an acre on for our 75-foot tunnels. And I also want to encourage you to think on too, if you look at scooters, Seventh Brew, Starbucks Coffee, all of those coffee shops are developing 900 square foot coffee buildings, and it is drive-through only. They've realized their customer base, they rarely want to sit down now. They don't need a 2,000 to 3,000 square foot footprint with furniture and things like that. They just want the 900 square foot drive-through only coffee shop. And so after analyzing their footprint and us already having a footprint in Greenville, South Carolina, about 8, 9 months ago, we said, hey, it makes sense because we can still operate these cars efficiently, anywhere from 80 to 120 cars per hour. We can push through this tunnel, making sure that our customers still get a clean quality wash. We do not want to decrease our quality of our wash to our customers. That is super important to us, is that they have a clean quality wash, and they're provided phenomenal customer service. And so we're able to do that on a smaller parcel of land, which means for our investors, our development cost is lower, our development time frame is faster, and we produce higher profit margins for our investors because of our development cost is lower and our time frame is faster. So the numbers at the end of the day on a side by side comparison, we actually bring more in profit with the shorter tunnels than we do with the larger tunnels. And on top of that, for the price that you're going to build a larger tunnel, we can build two of these car washes, which means that we're diversifying our risk. And so that,
Chris, let me
oh,
let me add one more thing to that. And guys, I think it's primarily due to the amount of additional demand and focus that's come into this space because of the updated tax benefits over the last, call it 12 months. The amount of technology and innovation has absolutely skyrocketed. So now not only are we able to bring to market a 75 to 80 foot wash at a fraction of the cost, but that 75 to 80 foot wash can put out a much higher quality wash than the 120 to 180 foot tunnels of yesteryear. Those tunnels, they're going to become obsolete before you know it. The industry is pivoting to this direction. We are not the only ones doing it. We are just on the forefront of this curve. And it's just something to keep in mind that we are staying up to date as everything advances and making sure that we stay in front.
yeah, very much so. You're spot on there. And so great explanation on that. I see another question. What parts of the country will you be expanding to? The Southeast. So we already own in the Southeast. We own in Atlanta, Greenville, South Carolina, Tampa, Sarasota, Cape Coral, Orlando, and then we are in the east side of Florida as well. And so we are expanding within those markets and building out that geographical density within those markets. And a lot of times we have people from Atlanta that have second homes in Cape Coral or Tampa, and they visit our site. So it's super important that we build out already where we have these operating sites throughout the Southeast and where the population is going to.
And guys, there's a reason we do that. We've found that is the absolute most lucrative pocket to own and operate these types of car washes in the entire US. So it's not to say that one of these sites wouldn't do well in Texas or Ohio or Pennsylvania. It's just to say that that same site would do that much better down here in the Southeast. And what we've done is we've created an opportunity that regardless of where you live in the country, you're able to take advantage of the absolute most lucrative pocket to own and operate a portfolio of these sites.
Yeah, and it's super important too with us owning the real estate. We're owning great quality real estate in great markets too. That is something that's important to us. We are not buying in rural areas We've been offered sites in rural areas and we do not want them. We want good quality real estate. It's the same play McDonald's has. McDonald's is in the real estate business. They're in great quality real estate and they lease it back to their franchisees. I see. Okay. Yes, I agree, Brian. The appreciation of the return is better also. I think the appreciation's there if you're holding a raw real estate. When you come to, multifamily, retail, self-storage, your value of the property is going to be based off of the income that that property is producing. Yes, you'll have, if that income is growing, obviously the purchase price is growing, but just the raw appreciation could be there. But any type of business that you have on that site, it's going to be based off of the revenue that the business is generating on what a lender's willing to pay or lend you to purchase that site. But I hope my explanation on location and getting real densified with smaller parcels of land helps on that too. Yes, thanks. I appreciate it. A lot of people love our business model as well. And we do as too. That's why we're in it. But yeah, for us, the numbers make sense because when we see our competitors and priced out a larger tunnel, it's going to cost 10 to 15 million, depending on the bells and whistles you have in it. Just like if you go past a single family home, they say it's 500,000, but then when you start adding all these things, it's a million. When you do that, we're able to diversify all of our risk by having multiple sites for a lot less compared to just buying one site for 10 million. We can have two sites for 5 million and still have healthy profit margins because we can get close to that output because of our technology inside these tunnels and our chemical composition. So love that. All right. Well, I know we spent some time here. Brian, I love your questions. I'll answer this last question. I want to spare everyone's time. I know they've time blocked that hour, and then Ryan and I can talk one-on-one after this with everyone. What is the remedies with storms, damages, assets, and building? Great. So, great question. We have insurance on all of our properties. When we build, we are building cinder blocks. We're not building, they believe it or not, we do own a couple, but we are not building the modular buildings. And the modular buildings that we do own are not in the hurricane areas or any large major storm areas. They're up north here in North Georgia. But when we develop, we're developing cinder blocks. We're making sure that we have insurance and umbrella policy over each site. But the lovely part here is that, again, our main focus at QC is investing in the infrastructure of daily life. And that also means making sure we're diversifying. Yes, we have great returns at 14% as our top class. We have very healthy tax benefits, but we also need that diversification. So in fund number three, you're diversified among sites that are in Atlanta, that are in soon to be Greenville, that are coming, that are in Florida. So say if, for example, and that's why I love the diversification of our funds, is that it's raining right now in Orlando, Florida, but in South Florida, it's not raining, and it's not raining in Atlanta, Georgia. That is why we have that diversification amongst the Southeast with our funds, is that sometimes it's raining in Atlanta and it's not raining in Florida. So our sites in Florida are still producing cars, where our sites in Atlanta are going to have a slower day because it's raining that particular day. Yes, that is correct. Yep, especially in the state of Florida, we want to make sure that they meet the threshold of the wind. Also, our lender requires it, and our insurance requires it too when it comes to our developments in the state of Florida. Great questions, Brian. I love it. All right. Well, I'm going to wrap things up there. I know we have 8 minutes to go. We can connect everyone on a one-on-one call. I'm going to send it back to the team at CRE Daily. If anyone has any questions, we'll send out our information and follow up with you. We're looking forward to working with you and answering those questions and getting you guys a spot secured in our fund number three. Thank you all. I hope everyone has a phenomenal rest of their week.